Got some analyst calls today we want to highlight for you. Starting with that one right there, that's Qualcomm. We're watching those shares today because that stock was downgraded to peer perform from outperform at Wolf due to a view that Apple's internal modem will finally have an impact. Sarat, you own the stock?
I do. It's built in. We've known that's going to happen for a while. Apple's pushed it out for every year since probably 3 years now. I do think you still have huge secular growth in the story at a very reasonable multiple. You don't have that super AI halo on a stock like Qualcomm. So I like it, and I still think the earnings growth is going to be pretty strong.
Jimmy, you have the stock too.
Yeah, at 15 times this year's earnings, PEG ratio below 1, I would say the news of Apple, when it comes out that they're actually finally getting rid of Qualcomm, is priced in. Now, the analyst actually does a good job of acknowledging that there's been false starts on this thesis before, doesn't want to be the boy who cried wolf, but, you know, there's been about 3 or 4 times that Apple has threatened to remove Qualcomm entirely and then doesn't. So let's just wait and see, but I think it's priced in.
All right, EPAM Systems, price cut to 245 from 258. That's at Mizuho Carry. That's due to weaker growth expectations and a more delayed recovery.
Yeah, so this is one of these software companies. It's a consulting software business that does a lot of work on AI integration for companies, and there's been a push out of client business. They know they're going to get it eventually, but it's timing, and it's not coming very quickly. They've acknowledged that. They can't really say when the business will pick up. It's a stock that trades for a market multiple. We think there's an opportunity here. We have, however, been early in the name, and we continue to like it at this price.
Union Pacific is on our list today because it was reiterated overweight. Wells Fargo, 270 is the price target. Rails are emerging from a prolonged investment period, which has boosted costs and muted earnings. So they're coming out of that. They're looking for a 13% earnings growth for this stock in 2025.
That would be terrific. By the way, there's been a lot of upgrades on this name over the past 2 or 3 months. So clearly, sentiment is returning to the railroads and to Union Pacific in particular. To state the obvious, this is not going to work if we have a recession, right?
I was just thinking that.
Yeah, I mean,
too. Right?
So I didn't read the report. I don't know if the analyst acknowledged that.
I don't even have to because I think you just hit the nail on the head.
It's so obvious, right? So look, I don't think there's going to be a recession. And on the back of the things that Union Pacific is needed for, building factories, building infrastructure, building data center, you need railroads for that.
All right, finally, Prudential gets upgraded today at Wells Fargo. That's the equal weight. Price target 113, was at 107 before. Strong capital base, ongoing momentum, Sarat, in its key businesses and alternative capital levers.
Look, the business is doing really well. The stock's down 20% in 3 months. So you've got a very strong dividend. Interest rates are coming down. Balance sheets like Prudential have over 80% of their balance sheet in bonds. That's going to help them when rates come down. So fundamentals are improving, and you have a good balance sheet.
All right.